folks, this is Larry Strzelecki from Assured Concepts Group with an educational economic update for November 2016. In this month's video, we'll discuss some of the major headlines that influenced markets in October and give you some insight into what they could mean for you as an investor. I'd like to start this month's conversation with a topic that's on everybody's minds: the presidential election. I think we can all agree that this has already been an unusual election session. And then, in keeping with ongoing surprises, on Friday, October 28th, FBI Director James Comey sent a letter to Congress indicating the agency would be reviewing more emails from Hillary Clinton. Then he sent another letter clearly indicating nothing has changed. Now, the markets have reacted to this original curveball with increasing volatility, with the S&P hitting its lowest point since July, and then responded with more volatility after the follow-up letter. But when you look past the current volatility and dig into October markets, you'll see underlying data that is much more positive than the recent volatility and media hype would lead you to believe. In fact, at the same time that the markets were reacting to the FBI's announcement, we also learned two important details that show the economy is improving. The gross domestic product is finally rising. Although not yet at levels desired for a strong economy, but growing nonetheless. And consumer spending has increased as well. First, let's talk about the gross domestic product, or GDP. It beat expectations and had its biggest gain in 2 years. This result means that the economy is not only growing, but at a faster clip than most economists had originally predicted. Second, the most recent consumer spending report from September showed it had grown 0.5% to reach a new all-time high. Personal income grew 0.3% as well. So in other words, people in the U.S. are finally earning and spending more money. This is good news for the economy. Now, I'm not saying that everything is perfect in the markets, but I agree with economist Brian Wesbury's description of our current situation as a plowhorse economy. Unlike a racehorse, who is fast and flashy, but only can maintain its speed for so long before breaking down, a plowhorse plods along one step after another. The motion is slower and less exciting, but plow horses have stamina and strength that their faster brethren lack. So as we look forward, I expect this plow horse to keep moving. The election results will likely continue to cause some market volatility in the near term, but even less eventful elections also typically cause volatility because the markets simply do not like uncertainty. Although slower than desired, remember that the economy is still continuing to grow. In fact, 86% of respondents to a recent CNBC poll believe that the Federal Reserve will raise interest rates at their meeting next month. Another indication that the Great Recession is getting farther away. We might not have a completely smooth ride ahead, but I believe we are still steadily moving in the right direction. I know that headlines and media hype can be disconcerting, but as always, we're here to keep you informed and share the information you need to have a clear view of where we stand. That's it for this month's Educational Economic Update. Please remember that nothing I talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give me a call at 847-426-1077. I'd be happy to talk to you. Once again, this is Larry Strzelecki with Assured Concepts Group, signing off for the month of November 2016.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.